Want to introduce ourselves. I'm Cody McGarrah. I'm with Rubber Duck Funding. We offer factoring, and separately we offer Rubber Duck Fleet Management, which is a suite of fleet-centric services separate from our funding capabilities. We will marry those together to help you guys keep working capital flowing, but also keep your fleet moving in the right direction. We provide some technology tools for that. And this is Jim with Trucker Tax.
Jim O'Donnell, Trucker Tax Service. What we do is we just specialize with the business management and, of course, tax preparation exclusively for the trucking industry. And we'll get into that in a moment with additional slides. Oh, you already have me up there. Okay, we've been at it. This is our 18th year for Trucker Tax Service. And as it says, what we do is we do provide a comprehensive range of business services. What we do is it's not just taxes. What we do is we start at expense management with an app that you load right onto your phone and so forth, capture all of it there, and then you have not 24/7, but at least unlimited phone calls in to talk to us about any type of tax or business type question. You know, like I'm buying a new trailer, is this a good investment for my taxes, you know, that type of thing, or for my business itself. You have access all the way up to a CPA if you'd like. The services up there that we're talking about, these are additional services that we do offer. The CFO services, we go all the way into where we can do powers of attorney and contact the IRS on your behalf and so forth if you ever get into any kind of situation. Payroll services, we were talking some folks here earlier that, you know, they have an S Corp. They should be paying themselves a payroll, and we can talk about that later, but we do provide that, payroll services. And then, well, I just said the IRS audit assistance, I already touched on that. And it's just a full business solution for you that to make sure that you are paying as few taxes as possible. Okay.
So we have been around going on 20 years, and we do not partner with people, except we have partnered with Trucker Tax. We have failed with most any time we partner with an outside firm because they're not aligned for the client like we are. We've gotten to know each other, and their suite of services really flow right through what we provide you guys in terms of some of your business matrix, and it was just a perfect marriage for us to work together and integrate our services together. And so we are very protective of who we work with, and it's a testament to the guys at Trucker Tax. At Rubber Duck Funding and Rubber Duck Fleet Management, we really think your success depends on just a couple of things. It's just there are a couple of really big things. And one of them is every decision you make in the beginning of your life cycle as a company will determine the likelihood of your success. And the most important are the partnerships you make. And those partnerships drive the outcomes of everything you do going forward. We're going to talk a little bit about that. This right here is a portal that we have created. It's proprietary to us. We've been developing this for quite some time, but it is our way of providing you guys real-time value-added matrix to help make better decisions in your business. This allows you to look at your revenue as a company, look at your revenue per truck, look at your fuel spend by truck per company, but also it allows you to manage on-the-road documents more efficiently. Now, you guys generally are thinking documents, probably my BOLs and tickets that I need to turn in to get paid. That's part of it, but that's really not the value add we're trying to do here. We're trying to create an electronic method for you guys to store all of the things that your drivers need on the road, from your virtual binders, your DQ files, your driver qualification files, all the things that inevitably trip you up when you get a roadside inspection. We used to do quarterly safety meetings, and we would have truck drivers bring in their binder that we all know is in the door pocket of your truck, and we would audit them and go through them, and we would give them updated IFTA certificates or even their IFTA stickers and say, you gotta have these on by March, all the things we do. And lo and behold, what did they not do? They never put it in their book. Then they get a roadside, they go through a port of entry, they don't have it, they get shut down, they're calling their dispatcher trying to find it. It's a wreck, it's always a wreck, no matter how good you are. But what we do as just part of our service is we provide you as a company owner, fleet owner, and your drivers access to a portal, and we audit it with a real human being who is really looking after your account, and we are auditing to make sure your cab card's current, your IFTA certificate's current, your insurance on your trailer, your insurance on your truck. All of those documents that are in your binder, we provide you a virtual binder for your driver, and we can customize it to specific needs that you may have on the road that's specific to your kind of hauling. But it's just a tool to help y'all be successful. It seems like a little thing, but it really starts creating the basis for your matrix, your business intelligence, and all of those things that you have to do, whether you have one truck or 150 trucks. Unfortunately, when you're an owner-operator of one truck, there's a series of tasks that you have to do that are the same series of tasks that a fleet of 100 has to do. But what happens as an owner-operator is you're not good at everything. None of us are. And so you pick the thing that you're good at, and it may be sitting behind the wheel driving the truck. So that's a lot of times owner-operators, really what they want to do is have their own truck and drive loads more successfully than they did as a company driver. But unfortunately, you've still got to get loads, optimize lanes, work with hiring other drivers, keeping up with all of your documentation, your permits, your IFTA every quarter, your 2290, your UCR, all of those things, and you push them over to the side and you don't quite get them done, and you certainly aren't keeping up with every expense that happens every day to then have a successful tax return. But so you've got to divide and conquer, decide what you're good at in your business, and find good partners that are gonna make you successful. And those partners are anything from who's gonna organize your business, provide compliance, your accounting, your capital access, your insurance, equipment financing, dispatching, load planning, your mechanical equipment management, back office operations from billing and AR and AP and reconciliations and driver settlements and your safety and your drug program. All of those things with one truck, you get to do them. And they seem like mundane little tasks, but we have to do them. And unfortunately, there's a lot of really bad partners you can sign up with in this industry. And a lot of them are in that building over there. And those decisions, you get sold on a solution and you get into it, or you get into a contract and it's the wrong one. And so your authority doesn't get set up right, or your BOC3 doesn't get filed right, and it's postponed, and all of a sudden you have combo tags instead of apportion tags. And so now you can't haul out of state for another 2 months while you're getting that fixed, or your insurance isn't right because they didn't get it all just, I know y'all have had some portion of that not go right. But all of those decisions that you make that weren't exactly the right decision determines the success 2 years from now. We can't solve all of that, but we will help you solve it. We're not the right solution for every one of your problems. We offer a suite of services that are, and they generally are services that we tried to outsource to someone else and they failed us at some point or another. But you've got to take each one of those tasks very seriously and really think through, why am I selecting this vendor and how are they going to be my partner for the next several years? And we are more than happy to help guide you along that path. We're not in competition with a lot of those services, or most of them. But it is so vitally important for you guys to succeed for us to succeed. And that is a mindset. If all your partners will have that, this is a much more beautiful industry to be in. Because, you know, when you look at 80% of truckers that go out of business, it's not always that they picked bad loads or they don't know how to drive a truck down the road. It's because of all of these partners that they have drove them out of business. And it really infuriates me, to be quite honest. But these are things that, as we get into Q&A, let's talk about them. Let's ask us questions. I can tell you some of the craziest horror stories, from factoring contracts and shenanigans to, I'll talk to you about any of it. But it's, you know, the reality check is one truck operators, you can't do it all. You've got to find people to help you out. And that's really the whole basis for what we're going to talk about today. And then you get all of that set up, you can then execute. You can then plan your loads and plan your lanes and develop the relationships with brokers out there, and they're not all bad. Some brokers are good brokers. Try to find some direct freight with maybe a local shipper that's in your market, or maybe it's a shipper that you've run across, you know, through a relationship here or there, a load you picked up and you hit it off with them, and it becomes a relationship you have for the next 10 years. And that's where someone that can help you on the fleet management side, whatever it may be, can really help build some true customer relationships. Because at the end of the day, what are you trying to build as a trucking company? A company, not just be a trucker until the truck wears out and you go away. You're trying to build a company, and you can't have a company if you don't have customers. And so many of these owner-operators go out, they get their authority, and they run loads for one shipper or one broker primarily, and they wake up 5 years later and they have no customers except that one broker, and they never built a business underneath themselves. And so they're just still beholden. They're still a taker of loads. They're not a negotiator of loads and negotiating a lane and finding a solution. And you can do that with one truck. I've seen guys do some of the coolest stuff with one truck when they find that one direct shipper, or even that one broker. You know, you always hear the story of, go to that broker and take their worst load and prove that you're a solution provider. And I don't exactly agree with that, but the point of that is right, which the point is, prove to these shippers, even as one truck, that you can add value. You know, you can be their go-to guy, and there's some pretty neat things you can do if you approach the business properly and approach it professionally and not just approach it as a truck driver. But here's the harsh truth. 80% of small businesses fail due to poor accounting and cash management. He asked me earlier, he's like, is that a real number? And it is. It's actually a research number. But then you add trucking into that mix, and it's higher than that. And it's not higher because trucking is a bad business. It's higher because truck drivers are so diverted from working on their business, they're forced to work in their business as the truck driver. And when you're driving a truck, you can't do all of those other tasks that you're forced to do. And so your failure rate is higher because you didn't find good partners, so that you could then focus on working on your business rather than just being sucked down into it. But then as you start building that business and you're building that foundation, you've got to have systems in place that can then take your revenue stream and your expenses all the way through to the end of the year, so that you can pay that beautiful man named Uncle Sam. And that's where we really found that trucker tax was the right solution for us to keep our truck drivers and partners compliant all through the year. And that's
as important as the front end is, which of course is, because that's where you're producing all of your revenue. We've had way too many experiences where the drivers, we've had very successful drivers earning easily $300,000 netting in like a six-figure income, taxable income, and they're still going broke because they're just not managing the back end properly. What people do is a lot of them, they just focus on the business, getting that revenue in place, but then they don't know what to do with that revenue properly, and they way overpay on taxes. What we put up there, the self-employment tax, for anyone who doesn't know, self-employment tax is basically Social Security and Medicare. What it is when you're out there on your own, you're both the employer and the employee, so you're on the hook for a full 15% of that self-employment tax. I mean, just on $50,000 of net revenue, net taxable income, I mean, you're looking at $7,500 just in self-employment tax alone. So what you want to do is you want to make sure that you're managing that properly. And what we do is we look at that bottom line and see if it's time to take you to the next level. I'll talk about that in a slide that comes up here in just a moment. But that self-employment tax by itself is what has absolutely knocked the wind out of a huge percentage of drivers out there that have gone broke because they cannot pay the IRS. The other big piece of it here is very small percentage of drivers on the road that have their own business pay attention and do their quarterly tax payments properly. The IRS absolutely requires this, and if you end up having taxes at the end of the year attached to that net taxable income, you are required to pay a quarterly tax payment, an estimated payment, and you need to be doing that. And if not you need to be working with a partner who will take care of that for you. Okay, Cody. The biggest reason drivers get themselves into trouble is because they don't account for all of their expenses properly. What you need is a system. Most drivers, I mean, we've had drivers forever over the years that, they just stuff receipts into like even grocery bags. Like ideally it's some type of folder or something, but they don't get to them until much later. The receipt management with drivers it's just pretty poor, to be very honest. But it's also because you guys are on the road. You don't have an office to bring them home to. I mean, you might eventually get home and you have a home office, but those receipts have to stay in the truck for a long time. What you need is a system to manage those expenses basically on a daily basis, at the very least at a monthly basis, and ideally either weekly or daily. Now, the other big thing too that drivers, because of electronic logs here for the past few years, drivers don't account for their nights on the road. They just don't. And what we do is we experience this all the time, that a driver comes to us, like we'll file an extension for him and he comes to us in September to get his taxes done. Well, now he's going all the way back to January, February of the year before trying to find his nights on the road. And he's like, well, I'll just do, my ELD, my electronic log. Well, trucking companies are only required to keep that electronic log for 6 months, and then they'll delete it. And so now there's no more record there. And now this driver has just shot himself in the foot because he doesn't have access to that. So once again, you need to have a system. Even an old paper log would be better than not keeping track of them yourself. And we'll talk about that in a moment as well. The other huge thing is that net taxable income that I talked about a moment ago. If you're anywhere in the $40,000 to $50,000 range, that's kind of the threshold, or above, you should be talking about incorporating yourself because you're paying much too much in self-employment tax. And also the other thing too, with an incorporation, just an LLC, like a single member LLC, creates what's called a corporate veil. And so now if you guys are out there, God forbid there's some type of accident or something that insurance and whatever that you have is not taking care of it, they can't come after you past the LLC. As long as you're running all of your revenue through that LLC, you're protected, and only the LLC, it stops at that point. Or if you've gone the next step to an S Corp and so forth, they have to stop at the company. They can't come after you personally. The other thing, no, go back. Sorry, can you go back? Okay. The other thing that the S Corp will do or bring you up to that level is it significantly reduces those self-employment taxes. And the way that we do that is through payroll. And what we do is we pay you a reasonable wage from the IRS, or the IRS expects a reasonable wage. Like if you had net taxable income of, say, $60,000, well, what we're going to do is we're going to pay you a reasonable wage of about $30,000, $2,500 a month. And then the other $30,000, that's still your money. You have 100% access to it. The difference is it's no longer subject to self-employment tax. So that $30,000 just saved you in the neighborhood of about $4,500 in tax. It's that simple, and it's just because what you're doing is you're being taxed as a company now instead of as an individual. And the biggest kick is that the IRS actually encourages it because it's the structure they want to see. They want to see that business actually generating the revenue and then that flow into your personal tax return. And it saves you thousands and thousands of dollars in taxes. Okay, Cody. Okay, well, I've already touched on this, but the reducing of the net taxable income, that's what it does, is it reduced that net taxable income from that scenario from the $60,000 down to the $30,000. And I just went through that. The big thing also is you're also paying yourself a W-2 wage. And that W-2 wage, you're contributing to Social Security and Medicare, which also reduces that net taxable income. So that taxable income comes over, that $30,000 comes over. Well, you're also going to have some payroll deduction there. So it's reducing your taxes overall. And it's also, as I said before, you're staying compliant with the IRS because of the simple fact that they want you to be paying yourself a reasonable W-2 wage. Okay. And that's really all we wanted to go through. I know we kind of did it pretty quickly, but what we wanted to do is get the foundation built here and then just open it up to question and answer, to see what you guys have, like any kind of questions you guys want to start firing away. So please, if anybody has any questions.
Well, I think one thing that I want to clarify, when you say 40,000, I think it's important to step through what that means, because if you're a truck driver and you generate $200,000 a year of revenue, of load revenue, that 40,000 you're talking about is prior to your owner take. So if you have 40,000 of income before you have paid yourself anything, that's what you're kind of talking about in a sense.
Actually, no. What it is, and I'm sorry if I'm not being clear here. What it is on your corporate return, we'll put all the, or what's called a Schedule C if you're not incorporated. What we do is we put all of your income, your expenses, and whatever that net number is after all those expenses, and those expenses would include the W-2 income that we've paid you and so forth, but all other expenses, fuel, truck payments, all of that, then that net income comes over to your personal 1040, and that's where you pay the taxes. So that's what I'm talking about. Yeah. That 40,000, if it's anything 40,000 or above on that net taxable income, that's when you're going to get really hammered with self-employment tax if you're not in fact incorporated. Okay.
And so that includes, hopefully, all even single truck owner operators. And that's what,
absolutely.
And that's what gets overlooked a lot of times is, a lot of guys think that because they're a one truck operation, things like that don't really.
Yeah, it's actually our single guys out there or gals, whatever, that get bit the worst because they don't know that. And we've had so many drivers come to us over the years that have been at, I've been with my tax guy for, 15 years, and he's never talked to me about this. And I said, well, and what we do is we go back and look at past tax returns, and I'm not kidding, 80% of the tax they paid was self-employment tax. And it could have easily been avoided just by changing the structure of how they're taxed. It's really that simple.
Yeah.
Okay.
And I wanted to spend just a second here to go through a couple of these issues that we deal with on a daily basis. I want to give you a horror story or two. So when you're looking at that capital access, when you're a truck driver starting out, the truth of the matter is, before you even run 1 mile of revenue, you know, there's some capital you need to have in the bank, and it's fairly meaningful. You know, I mean, if you really want to have a comfortable start, you need to have 50 grand in the bank after you bought your truck and all of that. And unfortunately, almost zero have that. You know, I mean, it's people start on a wing and a prayer, and there's a way to do that with a little luck and a little bit of pixie dust, and that's how most of these guys start. But what happens, you know, everyone is self-funded. Very few truck drivers getting started are bankable in the sense of going to your local bank and getting a loan, you know, because you don't have anything to borrow against. You don't have, you know, you don't have your truck's already financed, so you can't borrow money against it to operate your business. You haven't generated any revenue yet, per se, so you can't borrow against your receivables. And so it puts you in a tough situation to generate income fast enough to pay for all of those crazy expenses, such as your own mortgage or rent, plus the fuel that you put in your truck that, if you're lucky, you won't have to pay for until next week, but certainly not a month later. And so it's really hard to get that cash flow started. And so there's so much predatory practices that are happening with factors. And obviously we're in that business, so we read a lot of these contracts. And they are crazy, and you guys need to be careful about these contracts that you get into with a factor that's going to buy your invoices and pay you in 24 hours, and all of a sudden you have the capital you need, and it sounds beautiful, except they are so predatory that they lock you into these contracts and create these fees on the back end and create this window at the back that you can never actually get out of that contract, and you're just stuck with them forever, and they can manhandle anything they want about your business. And it's very sad, and it's because they know that you're not going to read the fine print, or they're going to do some promotional offer on the first page of the contract, but then it gets excluded in some sort of an appendix on the 9th page that says, if this happens, this promotional thing that you really signed up for doesn't happen. And then you're locked in, and you're like, oh, well, it's just a 1-year contract I can get out of. Yeah, except the cancellation fee is so high that no one can ever get you out of it, and you just get stuck. It's a very sad thing that happens, and some of the largest factors are the worst about that. And I want to point that out, because that is a decision that will haunt you for a long, long time if you don't read the fine print. And I can tell you sort of best practices. If you want to call me, I've left our card up there, and we actually have a class that me and another guy in our company does, and we just talk about stuff like that. We don't charge for it. It's kind of a fun class. It's almost a community, but you know, it's kind of a private way for us to talk about some of the issues that happen in a setting that we're kind of safe and secure. But that's something I wanted to point out. Also wanted to point out on the insurance, you know, there's a lot of shenanigans that goes on there, because these insurance agents know that you don't have, you know, 20% down payment money. And so you're always going to be financing your premium. That's normal, except what you don't know is that a lot of times when you finance these premiums, your insurance agent is getting a cut on that premium financing, and they're adding several points to your premium finance cost. And so you're really paying a lot more for that finance instrument than you know. But what they'll do is lock you into an insurance premium without some of the things you need to get your down payment lower, and then they'll try to change your policy later on, you know, a week or two later after it's bound, and then you have to pay that difference all at once, and it doesn't fall within your premium finance contract. And so that'll get you in trouble too, and there's ways around that. It's called doing it properly to begin with. And then on dispatching, there's a lot, the dispatching industry is under a lot of scrutiny right now because of the, there's just this odd convergence between what brokers are doing and what dispatchers are doing. And brokers are bonded. They should be insured, but they don't have to be. But these dispatchers aren't bonded. They can't take ownership of a load, but yet they kind of do. They sort of shadow tender these loads, and they hand them out to their carriers that they're dispatching for, and then there's no accountability and things get lost there. But even more onerous is when you have a broker who's taking 15% or 20% on a load, but then they're also offering you dispatching. And it's like a way to get another 10% from you. So they're really getting 35 or so percent because they're just stacking on different things. And if you go to a broker and you're like, hey, I'll dedicate with you, they should be thanking you every day that you're a set of wheels that are going to haul their loads every day, every day, every day. They shouldn't charge you another 10% on top of it for the privilege, and it's just craziness that they lock you into, and they don't really disclose some of that, overlap in what they're doing and the netting that goes on. And so there's, this attempt at transparency of load pricing, and we'll see where that goes. But be careful with that. A dispatcher, and we offer dispatching, and if we dispatch a load for you, it's going to be your load. We're going to go and set you up with the customer, and it's actually you could leave the next day and it's still your customer. We're just dispatching the load, but we certainly don't charge 15-20% for it. A good dispatcher, if they can't dispatch for you for, the old number used to always be 10%, it's a good dispatch number, and that number's come down, honestly. If we're just doing bread and butter dispatch, it's going to be like 7%. And if we bundle some stuff together, it'd be less than that. But be careful with that, because there's a lot of funny business that goes on behind the scenes there. Mechanical and equipment management, find a good mechanic. Find one you can trust, but always remember that when you break down, you're never going to be where that guy is. So also be thinking about, how do you get your truck worked on the road and get your PMs done on the road, and take advantage of some planning when you miss an appointment and your appointment was at 3, you didn't get there till 4. Think about getting your PM done. Really optimize your day planning and your hours of service, and get maintenance done while you're on the road. I think it really helps. I've always found that the guys that will take care of their truck make meaningfully more money in a week. It is crazy. When I owned a fleet of trucks, I always had those 3 or 4 guys that got that were company W-2 drivers, but they came to me and they said, will you buy me a grease gun? And man, is that like a dream to have a driver ask for a grease gun. I will buy anybody a grease gun that wants one. And you would find them with a carpet in their driveway, and they'd have your truck sitting there in their driveway rolling underneath it, because they knew if they could keep that damn thing running down the road, they'd make more money. And they'd make like 20% more money, like meaningful more money. And then your back office. Find a partner that will help you there. Funny thing with factors will try to charge you invoice charges. And it's always funny, because they say, oh, we offer this, we'll do your invoicing for you. Well, hell yeah, you will. You're buying my invoices, and then they are your invoices. So the factor needs to invoice their own stuff. They don't need to charge you $1.50 or $2 to do the invoicing. That's the craziest thing I've ever heard of, is they buy your invoice and then they want to charge you to actually invoice it. I don't know. But don't fall for some of those fees. And then your driver safety, you've got to be in a drug program. But more importantly than that, think about your own safety. Like, don't laugh at videos. Insurance companies will push you towards sort of a safety program. There's a lot of online programs. Watch those videos, answer the little questions, turn them in, and save the money with your insurance company. Insurance will pay for it. Just take them serious. You'll laugh at them until you have some sort of an accident, and you'll wish you'd watched that video on, some sort of driving technique that you didn't think about. And we always drove that with our fleet that we had 20 years ago, and it really made a difference. It's like when you go to a conference like this, y'all haven't learned anything in this room today except maybe one thing. There's probably one thing that each of y'all have latched onto, but that one thing might change a process and yield more money. And that's kind of what a safety video does. And even as a single owner operator, watch them, pay attention to them, and believe in them. I have been involved in a fatality accident with a truck. I wasn't the driver, I was the owner of the truck, but the aftermath of it was horrible. It was the emotions around it, what it did to the driver, obviously the fatality itself, but then all of the legal that happened. I mean, you had law firms hired by insurance companies hopping on Learjets within 45 minutes. It is insane what happens when you have a fatality accident. And it wasn't our driver's fault and all of that. We were lucky that it was our absolute best driver in our fleet at that time. He also got out of trucking after that. It was pretty hard on him. So pay attention to safety, and remember, you're the professional on the road. You should never get mad on the road. There should never be road rage with a driver because you're the professional. Everyone else is the idiots, and you're the professional. You can always take your foot out of it, things like that. But I want to go back to one other thing, and we can all go home, and that's fuel. Pay attention to your fuel. Out there are fuel programs everywhere, and let me tell you how they work real quick. A fuel program, if it's a big fuel program, they're out there negotiating, cost plus deals, and they're going to give you a retail minus deal. So they might give you 15 cents off, but they're getting 30, 40, 80, $2 off. It depends on the cost plus that they're under, and then they keep the rest. If you're a fleet of 20, you're going to get a lot more of that discount, and they're going to make a little less. But as a small fleet, they are making a lot of money off of you. And so shop the guys that are sharing more of that discount or even sharing that cost plus discount with you. We have drivers that can make $300, $400, $500 extra dollars a week with one truck through fuel savings. And it's one of the things that our fleet managers do with a driver is really hound them to drive an extra mile. We know you love Loves when you're getting a shower and all of that, but go an extra mile and get an extra 40 cents off at the next truck stop. You can always go to Loves at night, but really think about those fuel savings at every turn, and it can really make a difference. It can actually pay your truck payment for you if you'll pay attention to it. But that's just sort of an example I wanted to walk through with how each of these can really have meaningful impacts on your business. And that's all I have. I hope that you guys will come up here to the front, grab some of our stuff. One of them is our class we have. I'd love to have you guys on. The other is some totally cool stickers that everyone likes, and you need to come get a couple to 5. And then just some brochures and things, and then sign up here if you would. We would love that for obvious reasons. I'm not going to hide it. But thanks for coming. Thanks for hanging around. Yes? We only had a forward-facing camera. That's all we had. Yep. Yes. Yep. Well, and or I'll tell you a funny story that happened. So I had a driver call. This was years ago, and they said, "Hey, you're going to get a call from this guy. We were trying to merge onto the interstate outside of Houston, and this guy was road raging and was mad, swerved out in front of him, slammed on the brakes. We had a hard-braking incident, but we avoided an accident. But the guy was just mad and just road raging." I said, "All right, well, save the camera stuff for me." And about 3 weeks later, the guy finally called, and he was, threatening us, and he was going to get us, And I said, I am so glad that you called. I've been wondering who you were. We have you on camera, and thanks a lot. We now know who we need to send the bill to. Guy hung up the phone. We never heard from him again. He totally went away. And those cameras can save you. And, you know, if you can, it's hard to get an owner-operator to do a forward and a rear facing, obviously, because it's so invasive. But, man, if you'll do it, it'll save you someday. You know, that information is key. And it can also hurt you. I know what you're talking about. But these insurance companies, within 5 years, they'll mandate it. They won't even insure you, I bet. So, for sure. Yeah, you know, we can generally find 10% discounts with cameras, and a lot of times they'll even give you a first month credit to buy cameras and things like that. So, and anymore, a lot of these cameras are pretty reasonable. You can package them with your ELD and things like that, and so it's just silly not to have them. It's such a valuable thing. But any other questions? Thanks for coming, guys.